LiteFinance, the
Hello, it's Monday, December 18th, and of course it is time to start the market forecast. In today's video, we will focus as always on macro events from the calendar and summarize fundamentals, and based on them, we will prepare a trading plan for gold. Okay, so let's begin with the calendar. So, Monday looks calm, just a couple business-related data from Germany, but nothing major. On a Tuesday, we will get a rate decision and monetary policy statement from Bank of Japan. On Wednesday, inflation rate from the UK and conference board consumer confidence from the US, of course. On Thursday, US final GDP figures, and on a Friday, mixed signals because we will have retail sales from the UK, yet they will close the markets quicker due to Christmas holidays. Still on Friday, I think more important is that we will receive a PCE inflation data from the US. The end of the week might be very different since, yes, we have holidays, but sometimes this might bring higher volatility due to lower liquidity. But now let's move on to fundamentals. So central banks' activity moderated gold ETF outflows in 2022-2023, when 1,000 tons and more were purchased annually. But the situation risks changing drastically in 2024. The idea of de-dollarization will unlikely disappear in China, Russia, and the Associated States. Central banks will continue to buy gold. At the same time, the return of investors to gold exchange-traded funds will strengthen a tailwind for the XAU-USD. And it's the Fed that should be thanked for the service. The US Central Bank made the markets a Christmas present, having moved in a dovish direction. In the wake of the FOMC's December meeting, the derivatives expect a Fed funds rate to be cut by 150 basis points to 4% in 2024. The investors estimate the odds of policy easing in March at 71%, even though the Fed expects a slower monetary expansion. Jerome Powell admitted the central bank was discussing a time frame for reducing borrowing costs and was worried about the negative effects of high rates on the US economy. The only thing the XAU-USD bulls are concerned about is the market's belief in a soft landing. The US's ability to avoid a recession is beneficial for US stocks, but not for a safe haven asset like gold. In this regard, TD Securities advises buyers to be patient. The investment bank forecasts an average gold price of $2,019 per ounce in 2024, but the first quarter may not be successful. They say that the US economy will remain strong and begin to move towards a recession no earlier than April to June. That's when gold will be given the green light. Gold could face some trouble at the beginning of the year as market expectations of the Fed's monetary expansion in 2024 fade away. However, closing the longs opened on retracement to 1990 won't make sense as long as the XAU-USD continues rising. On the contrary, we build them up if resistance at $2,048 is successfully broken out. And that will be all from my side. Thank you for watching and goodbye.